Hi, it's October 8th, Friday. The markets, stocks are kind of in limbo here. They've come down from their early September highs as expected. The biggest thing I am noticing, we broke out of that very clear rising wedge pattern. And normally, if that were the top, then we would see a more sharp or violent crash by now. We haven't seen that. So that suggests to me the markets want to rally, whether they go to a new high or not. They want to rally one more time here. We have the bond yields. The 30-year Treasury got up to 1.6%. You know, they were just 1.2% not too long ago, and they went from 1.4 to 1.6 quickly. So, you know, that is a limitation on the market. Inflation is remaining high. And so stocks are looking like they're very near a major downturn. Again, question is, do they rally one more time? And I'm leaning towards that. And so I'll keep you updated. Subscribers should look for updates on that, you know, in the coming days. Bitcoin is running again. You know, it got up to its high in April, near 65,000, crashed to around 30. And it just kind of, you know, went back up slowly for a while, but it made a high pullback. Now it's making new highs. So it went, it tested 40,000 and went back up to 56 very quickly. So I think there's a strong chance that Bitcoin will make a new high. That'll be the final high for years. I've been looking for this because Bitcoin's been in a very clear 4-year cycle, peaking in very late 2013, late 2017. So the next one obviously is late this year. So I've been suspecting that this 65,000 peak in April was not the end. And there also was a kind of a one wave before that. So that looks like a third wave, fourth wave correction, and we may be in a fifth wave. Now, importance of this beyond crypto investors. And again, my targets have been 85,000 on the minimum end for a new high and 115,000 on the high end. I'm kind of moving that minimum up more like 90,000 from recent analysis. So big run there, but that it also suggests that would be consistent with stocks making a new high as well, rallying one more time. So maybe this rise in bond yields kind of tapers off just for now. I do think that the 10-year Treasury yields look like they're going to 1.9 to 2%, and that certainly is going to be an even stronger headwind for stocks. And that's probably what triggers this. I'll tell you one other thing that I am going to be watching like a hawk. The Atlanta Fed, in recent publications, has been changing their GDP forecast from lower than the consensus, like 4 to 5%, at 3.5%, down to 1.3% ahead. Now, if that happens, then this rally is dead in the water. If that really is the reality, that under the hood, the economy is slowing again. And you got to remember, this is what I've been preaching about this, since this is 100% stimulus and no fundamentals this time. Unlike the booms into 2000, the bubble, and the continued rally and new highs into 2007, that had demographics behind it. Even the technology cycle supported a rally into late 2019, early 2020, but there is nothing supporting this. So if GDP really is weakening after the biggest combined monetary and fiscal stimulus in the U.S. ever, then yes, we are going to see this big crash soon. So I'm going to keep you updated on this. Subscribers will also get an update on Bitcoin today as well. So look for updates next week.